Hi, I'm Shane Hurlbut. I'm an ASC cinematographer, and I wanted to kind of talk to you about something. Getting started in this industry is almost impossible. And my wife Lydia and I, 14 years ago, created a resource called Filmmakers Academy to make it possible. We saw a lot of gatekeeping in this industry and not a lot of sharing knowledge. So we wanted to pull back the curtain, give you confidence, teach you all the necessary skills to be an amazing, successful filmmaker, and package it all on this online resource that you have at your fingertips, on set, on your phone, on your laptop, whatever it is. So we're going to give you $50. So if you go into the show notes, click the link, and hit the promo code FAPOD50, you're going to get $50 on your first year of an all-access membership. And I cannot wait for you to join our immense and immersive community at Filmmakers Academy, where we network, we share knowledge, we just bond as this huge filmmaking resource to ignite your creativity and push you beyond your boundaries. I cannot wait to see you in the Academy, and let's get to the podcast. Welcome, everyone, to another episode of the Inner Circle Podcast. I'm Shane Hurlbut.
And I'm Lydia Hurlbut. And in this episode, we are going to dive into everything business. I am so excited to welcome our guest, Russ Hand, who's going to talk to us about his role as business manager and CPA and go into taxes, deductions, insurance. When do you incorporate? Depending on what type of entity you are, and all things you need to know to set yourself up in your business as an artist. So, Russ, welcome to the podcast. We are so excited to have you.
Thank you so much for coming here.
Hey, glad to be here. Thanks for having me.
And Russ, if you could talk a little bit more about your background, your expertise, so people have an understanding of your world.
Basically, I'm a CPA who is working in the entertainment industry as a business manager. And what that entails is I handle the business side of an individual or company day to day and help them through the maze of requirements that needed to be, whether they choose a corporation or what entity they want to be, or how to even make the income reported.
Okay, so there's so much to unpack with all of this. And in addition to CPA work, your role as a business manager, let's just cover that a little bit more before we get into the specific questions.
Yeah, what is a business manager? Like, go into the nitty gritty of what you provide for your clients.
A business manager basically takes over the day-to-day financial, work and transactions of an individual or company. So anything financial, I get involved with. I can work with them, I can troubleshoot, I can set it up, I can get rid of it. And versus a manager, they more deal with the person's career. They guide the career. An agent, they in fact set up meetings. A manager can't do a contract where an agent can. And that's the main difference.
Okay, so this is really interesting because for some of your clients that you might business manage for, they also simultaneously would have an agent that is negotiating the deal. They send the deal memo to you, but how do you know as an artist and let's say as a cinematographer, whether you just need to have an agent or whether it's time to add business manager and that skill set?
Well, that's an interesting question because the agent, you need to have exposure to get people to know who you are. You don't have enough time to run your reels, make phone calls, look at every single movie or TV show coming out. Someone's got to do it for you.
Mhm.
The agent should filter all of that so you know what you can look at and what you're good at. The agent's going to know, well, this production company is looking for this kind of director or DP or some kind of person who works with an underline, overline, doesn't make a difference. You can't filter all that. You don't have time. Whereas a business manager takes over the finances and you don't have time to do all that. When you're working on a show 14 hours a day, 6 days a week, the last thing you want to do is come home and do a bank rec.
Right.
Exactly.
Or wonder about your credit cards, whether they're going to work or not, or whether you get paid or not.
Yeah, I find that, traveling all over the world, and also Lydia being, when we first started to think about, getting you as our business manager, I was like, I had Lydia in grad school. I had me traveling all over the place.
Yeah, I remember that.
How can we, I remember like, not paying bills on time, and then all of a sudden I didn't pay the mortgage and I didn't pay this. And I was like, oh my God. And then Lydia's, in school, I can't bug her. And I'm like, oh my God, I'm not able to handle this. And it got to a breaking point for myself where it started to ruin the creativity for me because I was trying to concentrate and manage all the finances of making sure everything. It's the kind of stuff where I was handling it, like signing checks and everything on the job, and then trying to get my head around the script and the daily plan for the day. So, you were a breath of fresh air that came in and just said, Shane, I got you. Right.
And it was, let me just clarify that I was in graduate school in the state of Virginia.
Correct.
So, and it was a very different time back then because there was no online banking. It was
right.
It was a very different world because we've known Russ for a long time and he's a friend in addition to all of the professional services that you provide to us. So I think my biggest question is there's so much in setting yourself up as an artist to properly do it to avoid surprises. So if you're freelance, let's start there because I think this is a really kind of good jumping off place. How do you know when to incorporate versus have just your name for taxes? I think that this is really important. And then how do you know what type of corporation to become? Because when you're first starting out, and let's say that you get to a certain level and all of a sudden everybody feels like taxes are always awful and you have all these tax curveballs and you don't have the ability to deduct what you would be able to if you were established as a corporation. So Russ, I'm going to let you dive into that.
The current tax laws make this choice much easier because under the current tax laws, there are no federal deductions anymore for any business expenses.
Really?
And your people that are listening all work in the entertainment industry. And they have a plethora of business expenses because if they don't have it, they're not working. And unfortunately, in order to do your craft, you have to have these supplies. Beyond telephone, you may have to have an agent. You got to pay dues. You got to have insurance on your equipment that you're renting. That's just part of what you do. So you're stuck with either you don't deduct anything or you try to go freelance, which means that you don't have taxes taken out. You get a straight check and a 1099. You're an independent contractor. Now, once again, the government steps in and says, but we don't want you to do that. So we're going to tell the payroll companies that you work for that you can't be an independent contractor unless you meet certain criteria. And if you payroll companies, you pay them, we're going to go after you. So in essence, you're stuck being a W-2 with taxes taken out, an employee, or you have to get an entity to incorporate.
Okay. So how do you know?
Yeah. How much are you earning to then say, okay, I can incorporate?
You have to earn about $150,000 gross a year make a corporation worthwhile. Because a corporation has costs.
Right.
And the costs sometimes outweigh the benefits of the deductions that you can take as being an entertainment person.
Okay, so in terms of corporation, because I find this very confusing, and I think a lot of people do too, there's a C Corp, there's an S Corp, there's an LLC. And how do you know which one to choose and what do you recommend to people? So if I'm a freelancer working in the film and television industry, how do I know what type of corporation to pick?
It's almost always going to be an S Corp.
Okay.
Mainly because an LLC is not recognized by anybody as a true entity when you're an individual.
Okay.
So
Why?
a Disney is not going to pay an LLC. They'll pay a corporation or they'll pay an individual because the federal government does not recognize the LLC as an entity.
So is that a trap that a lot of people make? Because I know a
No,
lot of people.
it's not a trap. It's more of a mistake. An LLC is used for other things, such as if you want to produce an independent movie. You set up an LLC, it's funded, and that way the liability shifts away from you
Yes.
to your LLC.
That's what they do on every film.
Exactly.
It shifts it away from Netflix.
Exactly.
Right? So Netflix creates the production company creates an LLC that is the, Twin River Productions, right? And that becomes the LLC, even though Netflix is producing it and paying for it and doing everything, it's all being shuttled into that LLC to
Right.
basically deflect liability, right?
That's why at the beginning of every movie, you see about 4 to 5 production companies' names come up.
Yes.
Because they're all shifting liability back and forth. And who owns it and who's liable in case somebody gets hurt on the set, in case they say something someone doesn't like and they get sued by a country. And all this stuff is real.
Okay, so LLC, great for production companies to deflect liability.
LLC is great if you're producing a film.
Okay.
Not so much a commercial production company.
No. Yeah.
Or it's just a one-off on a film.
Yeah.
Okay, great point. And the studios do it, and that's awesome.
Yeah.
Let's talk
TV
about
series, anything that's that entity, they create that kind of shell. It's like
correct.
the LLC.
It's a one-off for that particular project.
Yeah.
And then at the end of that project, that closes down or may not, right? Depending on.
You have to be careful because along with making a movie, you have rights. A lot of times the LLC will be a second entity that has the rights and one that has the production. So that's critical, and that's more of a lawyer kind of deal than what I as a business manager would do.
Yes. Okay. And that's great because it's distribution, it's rights of the project. You have to be very careful what you're doing. And that's why I'm highlighting it with the LLC.
Right.
With the S Corp, let's dive into that a little bit more because you said for freelancers, an S Corp could be a good choice.
It's probably the only choice because an S Corp is more forgiving when it comes to profit and loss. A C Corp, the company itself pays the taxes. And if you build up earnings in a C Corp, over time, you're going to eventually close it down and sell it. Those earnings you already paid tax on are taxable again to you.
Oh, God.
So that's the double taxation.
Yeah.
So to avoid all that and to avoid having to worry about closing out the cash account every single year, an S Corp's more forgiving. You're still taxed on it personally, but you're not paying a double tax in the future.
So what are the costs to somebody of setting up an S Corp?
Yeah.
Well, the costs range anywhere from $500 to $3,000, depending on who you have set it up.
Okay.
And this is something that accountants or business managers can do, or some people have their attorney do it for them, correct?
Everybody is different.
Okay.
We will set up a corporation, not a problem. You can go through a legal Zoom. You can go through an attorney. All depends on what your requirements are and who the person you talk to can handle or not.
Okay. So I think that's the corporate structure. Let's get into taxes, tax law, deductions, all of that good stuff.
So now that let's paint this story.
Yeah.
I'm a freelancer. I'm making more than $150,000 a year. So I'm going to say, okay, I'm going to become an S Corp. And you've done the process of filling out the forms and created it. What deductions can I take in that S Corp now to help me be an artist? The tools that are required.
Okay, theoretically, any expense that you use exclusively to do your craft is a deduction. But keep in mind that the burden of proof is on you, the taxpayer. So if you have a certain camera, for instance, that you want to deduct, that's fine. But if you're questioned by somebody, you must show why it's a deduction. And that could be, well, I use it on this film. I rent it out to people. If it's to take vacation pictures with your family, it's not a deduction.
Right.
Because it must exclusively be for business. Or you must proportion it out what's a business use versus a personal use.
What about research, like being able to go see movies, buying reference books?
They must be for particular projects.
Okay.
So they have to...
You can't have a general standard. It's just general knowledge. If you're shooting a piece, let's say in the 60s, and you want to go back and look at the scenes of a city, and you buy a couple reference books, or even you go out and get a couple videos or streaming something about that time period so you can get an idea how to light something or what supplies you need or what background you need. That's fine, but it has to be that particular project.
Okay, great.
You can't just say, well, I want to be an editor. I'm going to go out and buy every single book on editing.
Okay, so I have a very specific deduction question that you and I get into all the time because you constantly say to me, no, Lydia, that's not deductible. And I don't understand why, because it defies logic. Okay, so whenever I take courses or do learning, let's say that I were to dive into Jordan Brady's commercial directing boot camp. Okay. Or for my health and wellness, I do Reiki, or I do a Reiki course, or how to become a Reiki practitioner, or whatever. What is the deal and rules with deduction around that? And why could online courses or higher learning not be deductible?
What do you do for a living?
What do I do for a living?
Yeah.
I practice Reiki, and I am also CFO here.
Okay. Does a CFO need to have a business or a movie video?
No.
Then that's why it's not deductible.
So you can only deduct based on what you do for a living.
To enhance your career. So a good example is, for me being a CPA, the cost of being a CPA is not deductible. But if I go take courses on learning about taxes, learning about accounting methods, learning about different laws for economics, that's deductible. Just like if you want to be a lawyer, being a lawyer is not deductible. But if you have to take classes about, again, learning different laws, learning new laws, because the laws constantly change, that's deductible.
So if you wanted to take an online course about CFO and managing and all that kind of stuff, then that would be deductible.
But what if you're working like I do 2 or 3 jobs?
But a new job, the initial class to get into it is not deductible. Once you've established yourself as doing that job, it's then deductible.
Okay. And I think that that is a really important distinction for people, because if, let's just pretend I wanted to go into commercial directing, when I took Jordan Brady's boot camp, but I was not an established director yet. I could not deduct.
Or not even a filmmaker.
It's not even established. It's making your living being a commercial director.
Okay.
You're trying.
Yeah.
Yes, we are.
But before you try, you must learn it. The learning is not the deduction.
Okay.
Once you learn it, then you get, let's say you get a gig or
Any continuing education.
Exactly. Then the podcast for Filmmakers Academy, go for it.
Okay. I would like to strenuously object to that, but I have no say or control.
I don't write the rules. I can tell you, though, that to defend that in front of an IRS agent,
yeah,
I'm not the one doing it.
I know.
Right.
I know. So it doesn't get deducted.
I
understand. I understand. Let's talk about the 5 biggest mistakes that you see freelancers make. Like if you had to pick, okay, here are the top 5, what would that be other than deductions?
Not realizing that the money they make as freelance is taxable. And they aren't having taxes taken out. At the end of the year, they must take all that money, include it as income, and then pay a tax on it.
Mm-hmm.
So you must make estimated tax payments along the way. Otherwise, you're penalized. The other big mistake is freelancers will go through a legal Zoom and get incorporated because some company told them, we're not going to pay you unless you're a corporation. They'll get incorporated and they'll forget about it. And then I'll get a phone call. Well, so-and-so, I incorporated 2 years ago. I'm getting letters now because you have to follow through. A good start is a freelance person starts with nothing. They start with knowledge. As they accumulate experiences, their pay goes up. As their pay goes up, there's more responsibility they have to do, which means they're expected to do more on the set, to know more. And when they start getting more money in, they have responsibilities for the money. Mm-hmm. Whether it's a corporation, the corporation has responsibilities to do. They have things they have to do all year long, compliance. And it's simple things, forms to fill out, things they got to show as addresses, surveys, consensus. It's all government required when you're an entity. And I think you guys have that. You just don't know about it because a lot of times we just do it.
Right.
And it's taken care of.
Right.
So as you grow in the corporate entity world, as you grow as a professional, as you grow in the entertainment industry, there's more responsibilities.
I remember when I first started out when I was a gaffer and we signed you as our business manager. And I remember that I came back to you and I go, where did all my money go? Right. And you were like, well, you didn't pay any estimated taxes because, it was kind of towards the end of the year, right? Mm-hmm. When we signed you. And it was like, where is all my money? And well, you didn't pay estimated taxes throughout the year. So now all that money that you thought you had, you don't have anymore. And all of a sudden it's like, boom, went out of my bank account. So that is a huge pitfall. That happened to me. And, that's the reason we got you. And it's like, I think a lot of people, I talk to a lot of people about what you do and what you've done for us. And it's so weird because so many people have, first off, they've heard the horror stories where business managers take them for everything they're worth. Mm-hmm. Right. So there's
some account in the Caymans that all this money secretly goes into.
It's all
and
this
they get
embezzlement.
robbed blind.
Exactly. So we've heard all those horror stories.
The problem with that, and I'll be honest with you, because it's a common question I get asked, is my answer is you don't have enough money for me to take. Because with technology the way it is, they're going to find you eventually. And you will lose your license, which is your livelihood.
Right.
So you take a couple $1 million. Great. That's not going to last for the rest of your life.
Right. You're
and
done.
You're going to be caught. You're done.
Yeah.
Right.
And you have a red mark on you for the rest of your life.
Yeah.
Yeah.
So it's just not worth it. And it's too bad people do that, because every time it happens, I get in trouble. I get a bad name.
Right.
And not all business managers are dishonest. A few are. A few are short-sighted.
Yeah.
But most of us really want to do the best we can for our clients and make sure you guys have what you need.
Yeah. And that's the one thing that I really love about our relationship is it is very personal too.
Mhm.
You know, it's like we have a relationship. We've like, I think 95,
Yeah. Long time.
95. So that's 2005, 2015. We're almost
It's
going
kind
on
of
30 years.
years.
Yeah.
Right.
Yep.
And when I'm on set and I'll talk to other creatives about it, they are so resistant to have a business manager. And because it's the percentage that you take, and they already feel that the government is taking this much and
Their agent
is taking that much. You know, go through why it's very, I mean, we've kind of talked about what's important to be a business manager, but I really want you to grind down on the idiosyncrasies of, like, is there case stories that you can talk about, horror stories that you fixed, things that, because I want to be able to twist their arm to go with a business manager, because I feel it gives me so much more confidence. It gives me so much more flexibility with just concentrating on the project and not having to worry about all the financial woes and all that kind of stuff.
And time freedom. I think that time freedom is your greatest asset as a creative.
Yeah,
So
I don't want to come off a movie and then say, oh, I got to, negotiate this mortgage and, we're going to refinance and do all this kind of stuff and everything. I mean, I want downtime. I don't want to be thinking about all that bullshit.
Exactly right. The business manager is not for everybody. Some people can actually handle it. Basically, two kinds of people come to me. One person has no clue about finances. Just nothing. They're the person that doesn't pay the bills, doesn't open their mail, doesn't just buys, has no concept of taxes, concept of what budget is, concept of how much money they're making. They're just out there doing. And they need me. The other person is, like Lydia said, is time. They don't have the time to figure this all out. Because I know what you work. You work ungodly hours sometimes.
Yeah.
So there's not a second in the day to think about anything else but either work or sleep.
Right.
And we can help.
Yeah.
Because we're there always. So it allows you to travel and work in different places, allows you to have a weekend with your family. And we also are more efficient because we do this day in, day out for many people.
Right.
So that allows us to figure out your accounting, get your taxes in order, and you sign a few papers, and that's it. Everything else is taken care of. So you don't get letters from the government. You don't get letters from a bill collector.
Yeah,
that gives you a lot of peace of mind.
Yeah.
A lot of creatives don't realize with these tax incentive states that when they go to New Jersey and they go to Atlanta and they go to New Orleans, they think that that's all still, if they live in Los Angeles, that's all just California, But no, you have to file tax returns in every state, correct?
Yes.
Yeah.
And the finances, they can get very big very fast. Most people that I deal with now, a lot of younger entertainment people coming in, and everything's paperless. So, which is great. I'm all for the environment. The problem is when it's paperless, people get lazy. They don't look at their statements. They don't look at their balances. They go on their app and see, what's my cash balance? They don't look at how it got there. A lot of stuff slips through. And they also don't know until someone says, I need to have all your bank statements to buy a house for your mortgage, a car loan. And then it's too late because the bank probably has archived them. You can't go back and get them. Or someone asked you a question a year ago. Did you pay a commission on this? I never got a commission. Well, I don't know. And that happens tremendous amount of times.
Yeah.
And you have to have, being a business, whether you're just an independent contractor, an LLC, an S Corp, a C Corp, doesn't make a difference. Every transaction you have for business, you must have a piece of paper backing it up. It could be online, it could be scanned, but you have to have access to it and present it to whoever asked for it.
No, I think
And
that's what I
certainly-
always loved about you. You know, you would send every month, you'd send that vanilla folder to us that comes in, and it's got all the disbursements, the money coming in. You can track it, you can see it. It's something that, as a creative, that I don't have that financial, mindset to like Lydia does. I just love to see the numbers and see what's coming in, what's going out. And know, okay, I gotta, and I love the fact that I can go, how we doing this month? And he's like, cinch up, that's all you have to say. Or we're good. All right, excellent. That's I only want like 3-word responses, Russ.
Well, business management's a partnership. It's not just me doing all the work.
Right.
At least not in my firm. It's a partnership in that I want you to at least know a couple things. Roughly where your money's at, roughly how much you have. And we make mistakes. I'll be honest. When we send you stuff, I want you to look and say, well, that doesn't look right. What's that?
I do.
I want you to say, well, question me if you have a question. If you go to bed at night and worried about your money, I'm not doing my job.
Right.
I want you to go to bed at night, feel good, knowing everything's thing, and if you have a question, you can ask me. That's the partnership part.
No, exactly. I mean, that's in anything. You want to double and triple check everything.
You want feedback.
You always
checks
want
and
feedback.
balances.
I mean, how many times do we go down the road of on set? I'm like, did we double check that thing? Is it on? Oh yeah, it's on. It's all good, and then all of a sudden I'm in the middle of the take and the damn light isn't on. It's like
exactly.
You have to have that checks and balances for sure.
Exactly.
And I think Russ and I have worked very effectively in partnership over the years because I'm the detail-oriented person.
Oh, yeah, you're always looking
I am
at
the
that
person
stuff.
checking everything. And I think that, whether or not business management is right for people, I just want to get into, from a business perspective, all of the things that people may or may not think of. So that you help with, that I think is very important. For example, insurance. There's health insurance, there's gear insurance, there's homeowners insurance, there's car insurance, there's liability insurance. The insurance list goes on and on and on. It's a fortune.
Yes.
The paperwork is endless, even if you're healthy, to set up the online paperwork, to make sure, even if you're in the union, that your hours have been counted, that somebody on that side hasn't screwed up and, sent you a letter saying, oh my God, you're not covered, even though you do have the proper number of hours. So there's so much minutia and detail just in insurance that I think, you could talk about for days. But in terms of pitfalls, where do you see people making the biggest mistakes?
They don't understand what they don't understand. When you go from making $20,000 a year to all of a sudden jumping to a movie, to a series, and you make some serious money, a lot of responsibility comes that way.
Mm-hmm.
And the more you make, the more you buy, the more you must insure. If you have a family, insurance is very important. For instance, if you're a freelancer, you don't get to fall back on disability insurance unless you buy it.
Right.
And if you get hurt on the set, sometimes you're covered, sometimes you're not. But these are the things that probably you don't think about. until it's too late.
I remember you getting me disability insurance when I was a non-union gaffer.
Yeah.
Yeah. Which
Yeah.
I would have never thought about, you
Mhm.
know, I was doing all non-union gigs, and you're like, we don't have a safety net here. If you get hurt, we're screwed.
Yeah.
Yeah.
So what do you recommend for people in terms of insurance in an ideal world? And again, I know it's expensive.
Everybody is different. It's hard to recommend. Most things that we do, at least in our firm, it's based on the needs of the client.
Okay.
We don't have a bullet points and lists and say, okay, everybody falls under these categories. I work the opposite way.
Okay.
What is it you need? Can we provide it? Because everybody's different.
Yeah.
Right.
Everybody's got different families, different situations, different monetary needs, and different careers.
So do you view it like this is the dollar value of the lifestyle, and so in order to maintain that, here's the protection that you would need if you're not working?
Well, again, even that's kind of ambiguous. I'll tell you a funny story. My insurance agent and I always go back and forth with this. Insurance to me is a necessary evil. It's very expensive. Mostly you'll never ever need it, and that's good. But you have to have it. So the question is, you get married and you have a child. First thing I get is, Russ, how about life insurance? Good idea. Well, how much do I need? Well, in my opinion, you need only what you need. So maybe we've done it with you. We take it, say, okay, you have a child. The child's going to go to college. How much is college going to be? We're going to insure that. Then we're going to insure how much your mortgage is. And then if one of you passes away, it might be a year of tough times, mentally, whatever. You need some comfort there. And that's it. Now, my insurance agent says, no, I want my spouse and my family to live like queens and kings the rest of their life. That's the difference. So everybody's different.
Mm-hmm.
So he might buy the $5 million policy. I'm buying the $750,000 policy.
What about liability?
I want her to be able to live like kings and queens.
She already does.
I do. What about liability insurance? Because this can be, in my mind, a huge trap, because you have car insurance liability if you're doing any sort of production. There's liability for everybody under your roof. Can you talk a little bit about how you view liability insurance?
Well,
it's
liability,
important.
it depends on the need. Is what you do, can someone sue you for it? If you have employees, the law says you must have workman's comp. That's your liability. If you own an office, you must have liability for the office. Someone slips and falls, someone hits their head, trips over the wires, the camera legs, could be anything. And that's just not required, but it's smart because you don't want to lose what you have. What you've gained.
Right.
If you're just starting out in freelance, you don't need liability insurance. But if you have a camera that you're renting out, you may need liability insurance. If that camera hits somebody on the foot or falls over on somebody, you may be sued.
Wow.
So it's the need that we have to look at.
Mm-hmm.
That might be a pitfall for people too. They don't realize that.
Yes.
And then insuring the camera. Lenses and cameras aren't cheap anymore.
Yeah.
And some of that could be hundreds of thousands of dollars. And it's being transported across the country, sometimes across the world, to different sets. Who's covering that?
Yep.
Yeah, it's true. It's all of the things that you don't think about until you're in a particular situation, and it's a hard learned lesson.
Like, because one thing that I know that you and I talked about was having the corporation is awesome because if anything happened with the business or whatever, they couldn't come and get
That's
us
correct.
personally.
That's correct.
So that's kind of a nice stopgap with that. And that could be from a liability, like if somebody tripped and fell in
Mhm.
here and there was
Mhm.
massive amounts of money, that would be the Filmmakers Academy, corporation that would be attacked and not
Right.
us
Correct.
personally.
Right.
So that's kind of something that I know a lot of people might not know about, which is also a very good reason for a corporation if it's the right time
It
for
goes
you.
back to your comment, Shane, that you talk to your cohorts and they're already paying
Mhm.
enough money out. Unfortunately, when you are successful and you want to have a structure that you build around you, part of it is a safety net. That
Mhm.
safety net does include costs.
Yeah. And, people think about our education. They're like, wow, there's a lot of naysayers. This is so expensive. It takes a lot to run this Filmmakers Academy.
Yes,
And it
it
takes a
does.
lot to keep the lights on and the rent and the insurance and all the gear. I mean, I got 4 cameras on me right now and I got lights all over the place and hung in the ceiling. And there's a lot that it takes to do this
Exactly.
stuff.
And
Exactly.
let's talk cost of insurance, because a trend, and this is very important for people to understand, insurance has gone through the roof.
Yeah, why is that?
I have no control over that.
I
know,
you
but
do.
why?
You think you
Each
control
insurance, no, I really don't. You got
Why
that
is
kind of
it-
insurance, though. Every insurance has its own story.
But why is it so expensive?
Which insurance are you talking about?
I'm talking about liability, just whatever
As a
insurance.
general rule, the more claims there are, the more expensive it's going to be.
Okay.
Okay. So there's a lot of theft right now happening,
Yeah.
and it's affecting every city, every state, every community, every mall.
Mm-hmm.
And there's not enough enforcement to stop it.
Right.
So the insurance companies know this. So when they have claims they got to pay out, they raise their rates based on the claims they're paying out to make a profit.
Gotcha.
It works the same for car insurance.
Yeah.
When we had the
You get
pandemic,
in accidents.
nobody was driving.
Yeah.
Mm-hmm.
They lowered the insurance. Well, guess what? Everybody forgot how to drive. Now there's accidents everywhere, and they're bad accidents. And with electric cars, the Tesla is very fast, 0 to 60, very fast. It's also very expensive to insure because they get in accidents.
Yeah. No,
Gotcha.
that makes
And that's
sense.
a function of humanity, unfortunately. And all we can do as a business manager is try to mitigate that as much as possible by either shopping around or, in this case, holding on to insurance, because if you got to go somewhere else, you may get dropped. You may lose your insurance altogether.
Mhm.
I was talking with our driver in London, and he's like, he went to his insurance guy, and he goes, I'm thinking about, we just had a baby, and I'm thinking about getting a Range Rover. And he goes, that's where our conversation ends. And he goes, wait, what are you talking about? He goes, well, there's 90. He did this weird 90,000 Range Rovers stolen a month or something, or 900. It was ridiculous, the
And
amount
they won't
of
insure it anymore.
they won't insure them.
Yeah.
And it's like, and he's like, okay, copy that.
That's what we're coming down to, is our choices for what to buy, what to do, where to buy. The insurance is a big deal right now. When you go buy a house somewhere, before you even talk about it, you talk to an insurance agent and say, will you insure this place?
Yeah, is this a good area?
Yeah.
What is the
Well, because of all of the impacts from global warming and the flooding, I know that there's a lot of areas of the country where certain places just will not be insured.
That's right.
like
And-
that Paradise, California? They won't
Mhm.
insure that place, and they're building it all back again.
Well, the insurance to fall back on is a fair plan at the state.
Oh, okay,
Mhm.
gotcha.
But that's something that you say, what are the pitfalls? When you start getting money and you want to buy a house, you're not going to know that.
Yeah. So let's dive into, like, I know you said everything financial is what you do as a business manager. But let's detail exactly what that could mean for an individual. Like what specific things that you can handle at your
It's day-to-day financial. So basically, it's like you give me your checkbook and I do the rest. You have a credit card walking around with, a debit card maybe. That's it. Everything else our office will do.
And that's like home, insurance,
Well,
car.
it's all personal expenses and all business expenses.
Great.
And what's in between. Some people only do their corporations. They want to take care of their personal stuff themselves, which is fine. Other people, we work at different levels of business management.
So you can tailor all different styles to the individual.
Everybody is different. And again, not everybody is right for business management.
Yes. Well, and let's
because you give up control.
Right.
That's the key. You give up control.
No, a lot of people
of what you
that
have.
Control,
and that's fine.
Yeah.
They're either going to have to back into it because they're going to be in so much trouble, or they'll do it themselves.
So let's talk about, I know that sometimes, not every client is right for you either. And I know that, at certain times it's time to end the relationship. Sometimes you have to, I'm assuming let clients go because it's a give and take relationship. So how does that work? Like somebody could be great and then they're either not listening or they're going rogue or they're like, how does that work as well? Because I think people think, if it's not working for both people. So at any point in time, you could shift and change.
Well, again, the way my firm works is we're not on a contract.
Right.
We have an engagement letter that specifies what I expect of you and you expect of me, what we'll do. And my view has always been, if you're not happy there, leave. I don't want an unhappy client. If I'm doing something wrong, I expect you to come and say, I don't like this, I'm uncomfortable with this, what's the problem? On the other hand, I expect my clients to listen to me. If they don't listen, I'm not helping them. If I can't help them, I can't be business management for them.
Right.
And that's a criteria, my clients. If I no longer can help you, then don't pay me to be your bookkeeper. It's not worth it. Save your money and leave or go somewhere else.
Right.
And that's how I look at it.
Yeah. And I think it's very clean and it's very simple in its design, which is actually brilliant because the minute that you get into contracts and all of the rest of it, it gets very complicated. And so part of, I think, your greatest asset is really taking everything complicated and simplifying it. So let's talk specifically about people wanting to grow their businesses or to grow themselves as artists or to fund a project, loans. Let's get into a little bit about, when to do a personal line of credit versus a loan, for example.
That's very difficult to do because all of that is going to be based on what's happening today.
Yes.
The only advice I can give out is you borrow money when you don't need it. Because when you need it, they won't give it to you.
Yes.
That's a good one. I like that.
Yeah. Yeah. That's just standard in the banking industry.
Yeah.
And but one thing that I really loved also is like trying to think about all the things that to set yourself up for success as you get older in retirement. When I came, making my way up the ladder, my whole mission was to, make it as a gaffer and then hopefully break in as a cinematographer and then, get the movies that I need to do and all that kind of stuff. That was my main goal, is setting myself up, making a name for myself, and I didn't think about retirement. I didn't think about, 401ks. I didn't think about any of this stuff.
Well, that's my part of the partnership.
Exactly.
Is to think about stuff for you and say, well, you made this much money. Let's set up a pension plan account, put this money aside, and here's how it works. And when you listen, it works very well.
Yes, correct.
So Talk about the investing a little bit so people understand, or in an ideal world, what you think people should be doing. And can you do it too early? In other words, if you're 22 and you've just graduated, is that the time to be worrying about, a 401k and to be starting?
You should start as early as possible. Put away as much money as possible. Because remember, if you start when you're 22, when you're 32, you look back and say, wow, I'm glad I did that. You start when you're 30, it's all different.
Yeah.
Because
Like
of the
us.
compounding interest.
We did that wrong.
But compounding interest, too, plays a huge role.
It does and it doesn't. The biggest thing is you must put aside money.
Yeah.
Even if it takes away other aspects of your finances.
You're not going to get my wine, Russ. There's no way. I know you.
We've talked about that many times.
You tickle on that a lot too much, I think.
So what do you recommend, Russ, for people, let's say at every stage? So just starting out, how much should I be putting away?
People should be on a budget.
Okay.
Again, these are questions that you can't
No,
really,
I know.
you can't really answer.
But I mean, just if you're looking at
There's a basic formula
okay.
to do this, which nobody follows. It is when you first start out, you make sure that what you're making covers your expenses. You're breaking even, which means no credit card debt, and you can pay all your bills and be comfortable. Once you get past that, you can then start building on things. Maybe you get a nicer car. Maybe you move a better rent, get a house. Then once you move past that, you start getting the insurances involved. Once you move past that, then you start building up accounts, wealth, pension plans, savings account, investment accounts. Also keeping in mind that you should always have a slush fund of at least 3 to 6 months in savings.
Yeah, let's talk about that, because we've obviously had 2 strikes that were almost de facto for almost a year, because November of 2022, things started to spool down because they knew the writers were going to go out. So when it did happen in May, it had already been 6 months or 7 months of slowdown prior to that.
Right.
Then when the actors got on board, that was just like the straw that broke the camel's back to a lot of technicians and businesses that work in and around the film industry, just not all the people that work in it. It's all the surrounding factors that really got impacted as well. So this 3 to 6, this is something that you and we have always talked about, that's so important. And that's why we always try to get money, get a line of credit or a loan or whatever that we always have when we don't necessarily need it. So it's always there to pull on if needed in that quote unquote 3 to 6 month nest egg.
Now, keep in mind, what we're talking about is the best of all worlds.
Yes.
I understand that most people can barely get by with their paycheck. And it's very difficult to set aside money. And if they do, the car breaks down, there's a medical emergency, a family member needs help. This is just life. So that's a goal, is to get 3 to 6 months. Whether you can do it or not, don't know. Most people probably can't. And a lot of the people who are starting out in doing what they want to do in the entertainment field probably can't do it because they're busy for the next job. They're busy trying to get all of their ducks in a row, which is their training, their supplies, their kits, maintain all the knowledge they need to have to get hired.
So what can they do? Because I always like to look at creatively, like, okay, so maybe you get a tax refund, and instead of immediately spending that, that's where you start your savings, or that's where because I feel like, the goal is to do something, and something is better than absolutely nothing.
If you can, that's correct. Some people like to get their tax refunds. It's a forced savings.
Yes.
So they pay more in tax throughout the year. They take the refund, put it in a savings account.
Mm-hmm.
You can set up an IRA. You can do a lot of things. But it takes the extra bit of money that they have.
I totally understand.
Yeah.
And you have to be very careful with people because sometimes they don't have extra bit of money.
And it's
And that's unfortunately a field that I don't get in business management involved because the clients I take on, they have to have money. Otherwise, they're paying me too much.
Right.
And it's not worth paying me.
Yeah.
Right.
Yeah. Where I want to look at pitfalls just one more time. So maybe overspending, not saving. What else do you see mistakes that maybe people making, like thinking that the revenue that you're earning on one great paying project is going to be your revenue for the next, assuming that's going to continue?
People need to look to the future. They can't look to today. So a good example is when you get a hit series, being an actor or actress, and let's say it runs a couple seasons, you kind of get used to that, thinking, oh, it's going to go on forever. Well, it's not.
Mm-hmm.
It's going to stop at some point in time. And if you constantly have expenses that exceed or equal what you're making, when it's over, you're back in the same spot you were 2 years ago.
Right.
So people need to look at the future and say, okay, I'm making money now. What can I afford to put aside? What are my goals in the future? And again, this is best of all worlds.
Yeah.
Because most people live hand to mouth, and most people think about today and tomorrow and next month's rent.
Mm-hmm.
That's as far as they go. And that's okay too, but you have to have a plan to get beyond that.
And so what do you recommend as the plan to get beyond that? Like if you're...
Keep your spending down, keep your credit cards clean. Again, there's only two ways to get ahead. Make more money or spend less.
Mm-hmm.
It's not rocket science. It just isn't. And yet those are the two most difficult things to do for people.
Yeah.
Okay, so let's pretend that I have spent too much and I've gotten myself in a debt situation. How do you recommend, what are the steps that I should do to dig myself out of that?
File for bankruptcy.
No.
just-
You'd be horrible.
Well,
What do you recommend tackling first? Is it paying off credit cards? Is it...
it depends on the individual.
Yes.
What I tell the clients who come to me with that problem is the first thing you do in a hole is quit digging. It's funny, but if you think about it,
Yeah.
it's true.
Yeah.
And it's very painful because you're used to a lifestyle. You're used to your Starbucks every day. That's $6, $7 on your credit card. You don't think about it much, but you look at a month of it, and then go into a year,
That shit adds up.
it adds up.
Mm-hmm.
So you start working backwards. Okay, if you go into Starbucks every third day, how much money will you save? Well, then take that money and apply it to a credit card balance.
Mm-hmm.
And you work that way as a budget and a strategy. And that's how I deal with it. You try to rob Peter to pay Paul until you get back to the break-even point.
Okay, that's great. Because I think people really don't understand how difficult it is to get out of credit card debt. It's huge.
It's huge.
It's huge, and it takes time and it takes discipline to make small changes in your life. And, believe me, I've been in this situation before,
Well,
so I'm speaking from experience.
Yeah, and with the increase of all the rates recently,
Yes.
credit cards have gone through the roof.
They're all
Yeah.
in
I
the
mean,
high
what is the
20s.
percentage now?
High 20s, low 30s.
I remember when it was 15,
Or
just
12,
like 2 years ago.
12%. Yeah.
Well, the rates have gone up in the past 2 years.
Oh, okay.
Your mortgages have over doubled.
Right.
Yeah.
So the credit card rates have gone up.
Yeah.
So I think it's really understanding how that keeps you stuck. And that's kind of the interest is what keeps you stuck. Because if you just keep paying the minimum payments, then you're going to stay in that same situation.
Well, the interest doesn't keep you stuck so much. What it is, it's your habit.
Right.
The habit of paying a minimum tax or minimum payment to either get ahead or spend on something else is a very poor habit.
Mm-hmm.
And there's also what I call is life happens.
Yes.
Yeah.
When you least expect it, things happen.
Yeah.
A hole in your roof, a car accident that's your fault. You got to pay a deductible, got to pay a repair. You get injured and you can't work for a month. This stuff is reality. It happens all the time to people. A pandemic hits
Mm-hmm.
and you're sick with COVID for 2 weeks. This is reality.
Yeah.
Yeah.
And that's what credit cards are for. That's what savings accounts are for.
Mm-hmm.
And if you don't have them, then when these things happen, you get deeper and deeper in the hole. And
So
it just takes time to get out. Sometimes when clients come to me with this situation, we don't talk about 6 months, we talk about 2-3 years
yes.
of doing this.
Yeah.
Yeah.
All right. We need to end on a positive note.
I know, Russ. I don't
You
wanna-
asked the question.
I don't want to be depressed by our podcast. So what is creative and inspiring about money to you? What do you find?
The freedom it gives you and the stress it takes off in many ways, but also causes stress. To earn a living, to do what you love to do and get paid for it is a great, great feeling. But it's also a great responsibility.
Mm-hmm.
And you have to go, they go hand in hand.
Now, if what excites you about doing your job?
Talking to people. All day long, I problem solve. That's what I'm really, really good at.
Mm-hmm.
Anybody can do accounting. I've got a staff to do that. Anybody can add the numbers up, but problem solving is what business management is all about.
Yeah.
Great. All right. Well, that concludes this episode of the Inner Circle podcast. And Russ, thank you so much for coming on.
Thanks for having me.
You dropped some massive bombs to everyone and hopefully pitfalls to avoid. And don't forget to follow us on Spotify and Apple and our YouTube channel, filmmakersacademy.com. And we'll see you next time.